gentlemen. So, in previous episode, we have warned you about this current market correction. Yes, it has been very vicious. The REIT sell-off is actually one of a kind, right? As in my article, yes, you can go and look at it, where we explain in detail, right? In GCP Global website, which contains the last 33 years of our archive research, detailed as it is. You will notice that we actually had one of the worst months in the history of the last 20-year history of Singapore REIT market. So what do we do now? Now in today's episode, ladies and gentlemen, we're going to guide you on what you should be focusing on as you actually traverse and decide what to do with your REIT investment journey going forward as interest rates increases. So stay with us, and as usual, do hit the subscribe button. Do actually recommend a friend, and then send us an email at gcpglobalsg@gmail.com and stand a chance to win a lucky prize at the end of the month. We have more than 20 emails that come in based on that. So let's begin. Now, this article, ladies and gentlemen, yes, it is, you notice that came out in June of last year. Now, this is where we forewarn you of market corrections, major corrections, and possible crisis. Yes, ladies and gentlemen, GCP Global, we prepare our student investors way in advance. In this case, it's 6 months way before the correction kick in. Okay, now what to do in a correction, how to prepare a correction is important, because now if in a correction like what you're seeing now, if you already had prepared, not jump into positions, not taking heavy positions, not into margin account, then you are prepared to buy. You're flush with the cash, flush with the flexibility, flush with the optional value. And that's what we have prepared our investor students for. This means a few things. One, we have avoided placements like high price placements from good REITs, apparently like Capital TC, Mapletree Logistics, MIT. Now, you have avoided losses on this because essentially in my previous email, you notice that I say that these placements, basically almost 50% of them would have lost money for the investors. At GCP Global Students, we are just so happy that our student investors who attended our investment classes had been able to avoid that. And we want you to actually avoid that. Now, let me just move on. Now, so if you are flush with the cash, what are you going to look for now? Now, look at the next thing that we have been hammering in the last 5 years now. Yes, this came out in an article in September of last year where we mentioned that the key and the trait to outperformance in REITs is DPU growth. Yes, bottom line, DPU growth, nothing else. Now, REIT managers may have given you excuses that, oh, let's do an adjusted DPU. Why? Because they issued shares last year, or the acquisition they made only start to kick in terms of earnings after a particular date. Right. Now, we do not believe in such things because historical and empirical evidence that we've shown you in our research have shown that if you do not give REIT investors a good DPU growth, your share price will not outperform. So which are the REITs that really will be able to deliver positive and strong DPU growth this year and next year? Yes, in our investment class this coming weekend. Yes, this coming weekend. We are so excited to want to present this to our student investors. So do join us and catch the last minute early bird special if you want to actually find out which are the good REITs that can deliver solid DPU growth that will give you outperformance as over the last 5 years. This particular trait has turned out to be a key determinant of outperformance. Thirdly, ladies and gentlemen, question, what kind of acquisitions that REITs actually undertake, right? Do they actually buy into acquisition just because they're going to increase their management fee? Of course, most management, or in fact, all management will never tell you that they are going to acquisitions because they want to increase management fee, right? Because on top of the acquisition 1% or 0.5% on new acquisition assets, you also get a chance to dispose further assets, which you actually get disposable fee. And then you have a higher management fee on a higher AUM. But the key questions over the last 2 decades in Singapore REIT history is this, especially now that most of the recent REIT acquisitions have come under a big microscope because of huge underperformance. right? So what should you be looking for in a REITs acquisition? How do you know a certain capital structure? Ladies and gentlemen, making your millions in REITs, we basically have highlighted and showed you a whole showcase, a list of checkpoints, okay, where we tell you which are the things that REITs must be able to achieve. REIT managers must be able to deliver, and what are the incentives of the REIT sponsors that will actually enable you as a minority shareholder to make money from REIT acquisitions. Okay, no point sinking money into REITs to finance one, their private placement, two, the preferential offer, when in the end, you as a shareholder ended up losing money. So for you to continue to receive dividend only to pay out in terms of placements, in terms of basically preferential offer, if not, your shares will be diluted. What's the point? That is not investment, ladies and gentlemen. That is not how you grow your wealth. So of course, at GCP Global, in our class this Saturday, we are going to discuss and study in detail which REIT acquisitions going forward would be the ones that would be prescient and beneficial for minority shareholders like you and me. So to join us, and sign up over here if you'd like to. The next thing, ladies and gentlemen, is that if you look at the performance of REITs, it's quite scary. As of, for example, our article in October last year, we have highlighted that based on the 7.5 year each, that is actually we studied REITs that have listed, that has had track record of more than 7.5 years, right? So there are only 23 REITs, okay? And of the 23 REITs, as you can see from the table, ladies and gentlemen, yes, there are practically more red marks, or close to more red marks than purple marks. Yes, these red marks are the ones that basically have delivered losses instead of positive returns as of the 7.5 year history of listing in the SGX. So does it actually break the myth that REITs actually make money for investors? Actually, they do, but do you and how you as investor be able to pick this positive REITs is key, ladies and gentlemen, and this is what we are going to explore in our class on this Saturday. We hope, of course, you can join us. Then last but not least, ladies and gentlemen, in my latest article, right, I have unfortunately had to deliver a bad news to you, but you notice that GCP Global for the last 33 years, we give you facts. Facts on REITs, facts on investment, facts on equities, facts on your fears. What are the things to fear? We help you to crystallize and quantify your risk, for example, so that you will become a better investor. And yes, please look at the table over here. This is the table of the CAGR, or compounded annual growth rate of the REITs, plus the list of REITs, which as of their prices end of last year versus the IPO prices. Man, ladies and gentlemen, you'll be shocked to the core, ladies and gentlemen, that 18 out of 38 REITs listed as of end 2021 have delivered either negative CAGR, meaning that if even you include the dividends that paid you since their listing, since IPO, up to the end of last year, you would still have lost money. And who is the chief culprit? It is actually ARA US Hospitality Trust, which up to now, since its listing, has hardly paid a dividend, right? So look further, ladies and gentlemen. These are the kind of REITs that you want to avoid. But is it a difficult task? Of course it is, ladies and gentlemen, because almost 50% of REITs are unable to deliver positive returns to you as a shareholder, right? So what's the point of growing Singapore REIT market, as a capital intensive market, more ingrained market, especially, when shareholders, minority shareholders can actually lose quite a big sum of money. Of course, you can still make money, but how to do that? That's what we attempt to do to help you in our classes on this Saturday. So to join us. And of course, if you're interested to find out essentially a few other things like how will interest rates impact REITs as well as your equity investments? Is it really high interest rates will always impinge on the growth of equities market, right? How does the past two interest rates from 2004 in summer 2004 to 2006 impinge on the REIT market outperformance, as well as the S&P index, as well as the STI equity stocks. How did the last rate increase from 205 right up to 2018 it impact stock markets? And how different will this time around when interest rates actually go up by maybe 8 times between now and next year, up to maybe to the 2.5% level that we are actually guiding for conservative reasons. So do join us for our classes. Our tech class is next is on 19th of March. So you can also sign up here now. Until the end of this month, you get to enjoy the special. So once again, feel free to subscribe to our channel. Do recommend a friend and send us an email at gcpglobalsg@gmail.com, and so that you can stand a chance to qualify for a prize. Cheers and Happy New Year once again.